Good morning, everyone. Today we're diving into a topic that might seem distant or complicated, but actually touches every part of our daily lives. Let's talk about something that affects us all: the value of money. Whether you're buying groceries, planning a vacation, or just saving for the future, currency values play a bigger role than you might think. When you hear about the US dollar getting stronger or the Japanese yen getting weaker, it's not just financial jargon. It impacts your daily life. These changes can influence the price of goods, the cost of travel, and even the stability of your job. A strong dollar means cheaper imports and more affordable travel abroad, but it can make American products pricier for other countries. So, if you're planning an overseas trip, your money might go further. But if you work in manufacturing or exports, it could mean tougher competition. On the flip side, a weaker yen makes imports more expensive in Japan, but boosts Japanese exports, helping their companies and job market. Japanese products become more attractive to buyers overseas, which can lead to more jobs and economic growth at home. These shifts are like economic weather, always changing, always affecting us. Just as you check the forecast before heading out, it's smart to keep an eye on currency trends, because they can change quickly and have ripple effects across the globe. Understanding currency movements helps us make sense of global prices, travel costs, and even local business health. It can explain why your favorite imported snack suddenly costs more, or why a trip abroad is suddenly more affordable. What's good for one country's consumers can be tough for its exporters, and vice versa. It's a delicate balance, and every shift creates winners and losers in the global economy. That's why experts watch these changes so closely. They analyze trends, predict impacts, and help businesses and governments make informed decisions. This week, both the US dollar and Japanese yen made big moves. These shifts didn't just make headlines. They could affect your next purchase, your travel plans, or even your job security. We'll break down what happened, why it matters, and how it could affect your wallet. Even small changes in exchange rates can add up over time, impacting your savings and spending power. Let's dive in and make sense of it all together. By understanding these shifts, you'll be better prepared to make smart choices for yourself and your family. Whether you're shopping, traveling, or just following the news, currency values shape your world. They influence what you pay, what you earn, and even the opportunities available to you. So, let's see what's driving these changes right now. Ready? Let's get started. By the end, you'll have a clearer picture of how currency values connect to your everyday life. Here's what you need to know to stay informed and empowered in a world where money is always on the move. This week, the US dollar rebounded after a rocky start, surprising many analysts who had predicted a longer slump. The greenback's resilience caught the attention of traders worldwide, as it quickly reversed course and regained lost ground. On Tuesday, the dollar index ticked up by 0.1% to 98.725. A small move, but huge in the world of currency trading, where even minor shifts can mean millions gained or lost. This uptick signaled renewed optimism among investors. This gain followed a sharp drop on Monday, when uncertainty led investors to sell dollars. The sudden sell-off was triggered by global jitters and concerns over political developments, shaking confidence in the currency. The quick recovery shows global confidence in the US economy. Despite short-term volatility, the dollar remains a safe haven for investors during uncertain times, reinforcing its status as the world's reserve currency. What sparked the turnaround? Anticipation. Traders and investors were closely watching the economic calendar, waiting for key data releases and policy updates that could shift the market's direction. Investors are positioning themselves ahead of a major economic announcement, betting it will be good news for the dollar. Many are adjusting their portfolios, hoping to benefit from a potential surge in value. Markets often move on expectations, not just facts. The mere hint of positive news can send prices soaring, while rumors or uncertainty can trigger sharp declines. After a brief dip from political drama, focus shifted back to economic fundamentals. Investors realized that the underlying strength of the U.S. economy outweighed short-term political noise. The dollar's rebound is a classic example of how quickly market sentiment can change. In just a matter of hours, fear gave way to optimism, and the market rallied. Investors are looking ahead, not just reacting to the past. They're analyzing forecasts, weighing risks, and preparing for what's next in the global economy. This week's action highlights the dollar's resilience. It's a reminder that despite challenges, the US dollar remains a pillar of stability in the financial world. Let's see what's driving these expectations and how the next chapter in the dollar's story might unfold. The dollar's stumble on Monday was all about the Federal Reserve. The Trump administration launched a criminal investigation into Fed Chair Jerome Powell, raising fears of political interference. Central bank independence is crucial for economic stability. Investors need to trust that decisions are made for the economy, not politics. The investigation created uncertainty, prompting a sell-off in the dollar. Powell responded by defending the Fed's autonomy, backed by former chairs and political figures. This strong defense reassured markets and helped the dollar recover. The episode showed how quickly confidence can be shaken and restored. With the Fed's independence reaffirmed, attention turned back to economic data. The stage was set for the dollar's comeback. With the Fed drama fading, all eyes turned to inflation. The Consumer Price Index, or CPI, is the key report everyone's waiting for. It measures how fast the cost of living is rising. The Fed's main job is to keep prices stable, so inflation data is critical. Economists expect consumer prices to have risen 2.7% over the past year, matching last month. The real focus is on core CPI, which strips out food and energy for a clearer trend. If core inflation ticks up, it could pressure the Fed to act. This anticipation is driving the dollar's strength right now. Investors are betting on a strong economic signal. What if the CPI report comes in hotter than expected? Higher inflation would force the Fed to raise interest rates to keep prices in check. Higher rates make borrowing more expensive, slowing spending and cooling the economy. For investors, higher US rates make the dollar more attractive. Global investors would buy more dollars, pushing its value up. That's why traders are buying dollars now, expecting the data to give the Fed the green light. It's a classic case of buy the rumor. If the report confirms high inflation, the dollar could surge even more. A single report can ripple through global markets. The stakes are high for everyone watching. The outcome will shape currency values worldwide. Let's see what happens next. While the dollar rebounded, the Japanese yen fell sharply. The yen hit its weakest level in a year, trading at 158.91 per dollar. The trigger? Political speculation in Tokyo. Reports suggest Prime Minister Takaichi may call a snap election, aiming for a stronger mandate to boost government spending. More spending often means more debt, which can weaken a currency. Investors expect expansionary policies, so they're selling yen now. The result? A rapid drop in the yen's value. Politics and currency are closely linked. The euro and British pound also felt the dollar's moves, reacting sharply as global markets shifted. Both currencies are closely watched by investors, as their performance often signals broader economic trends across Europe and the UK. The euro rose briefly during the Fed drama but stalled at $1.1666, missing its chance to break higher. This hesitation reflects uncertainty in the eurozone, as traders weigh the impact of US monetary policy on European growth. Now, it's waiting for US inflation data. If the dollar strengthens, the euro could fall. Investors are cautious, knowing that even a small shift in US data can ripple through the euro's value. The euro's fate is tied to the dollar's next move, making every economic headline from the US a potential turning point for the currency. The British pound showed more resilience, holding on to gains and trading at 1.3476. Unlike the euro, the pound has managed to maintain its strength even as global uncertainty lingers. Its strength comes from optimism about the UK economy, not just dollar weakness. Recent positive data and upbeat forecasts have given traders more confidence in the pound's outlook. The next test for the pound is the UK's GDP report on Thursday. This report will be closely analysed for signs of continued growth or potential slowdown. A strong number could lift the pound, a weak one could erase gains. The stakes are high, and market reactions could be swift and dramatic. For now, both currencies are watching US and UK economic data, with traders ready to react to any surprises that could shift the balance. Global trends and local news both matter, as every development can influence the direction of the euro and the pound. Traders are ready for the next big move, keeping a close eye on every indicator and headline. The story isn't over yet. With so many factors in play, the coming days could bring new twists for both the euro and the pound. The dollar's strength rippled across the globe, affecting the Chinese yuan and Australian dollar. The yuan slipped slightly, trading at 6.9762 per dollar. China manages its currency closely, but a weaker yuan can help boost exports. The People's Bank of China allows gradual shifts to support economic goals. In Australia, the Aussie dollar dropped to 0.6703. The fall was driven by weak consumer confidence and fears of rate hikes. When Australians worry, they spend less, slowing the economy. Domestic news and global trends combine to push the Aussie down. Currency values reflect both local and international forces. The US dollar's moves are felt everywhere. Every country must adapt to the shifting landscape. It's a global balancing act. Let's bring it all home. Currency values reflect global confidence and shape our daily lives. A stronger dollar means cheaper imports and more affordable travel for Americans. A weaker yen raises costs in Japan, but can make Japanese goods cheaper abroad. These shifts create winners and losers everywhere. Political rumors or economic reports can move markets worldwide in seconds. We live in a connected world. What happens in one country affects us all. Watching currency movements helps us understand the bigger economic picture. They influence trade, travel, and prices every day. Next time you hear about the dollar or yen, remember, it's more than a headline. It's your world in motion. Stay curious and keep an eye on the global story.